Is crude oil heading below $55 per barrel? Hello traders, this is Fawad Razak, Southern Market Analyst for City Index. Today is the 7th of January. Let's get into it. Oil prices sold off yesterday on the back of news that Venezuelan oil could return to market, and that has added to concerns that the supply of crude oil is going to increase even more than it already is, which caused prices to tumble. WTI created a reversal looking candle on the daily chart after failing to break resistance at around 58.50. This level had capped gains in the prior days before the news hit, and the reversal here suggests that the price of oil remains vulnerable for a potential drop below this area of support, which could be huge insofar as the technicals are concerned. This area was the base of the rally that started in April. We tested that area in May, another time in October, and finally in December we briefly broke below that April low of around $55 before staging a mini reversal there. But it looks like the trend has now resumed, with prices breaking 57, which is now the next level of resistance to watch, a level which was being tested at the time of this recording. This level had provided some support in the last few days, and now we are testing that level from underneath. So there's a possibility that crude oil could potentially reverse lower from around this level and head lower. Now, this area of support I mentioned has been tested on a number of occasions. So the more a level gets tested, or an area in this case, the more likely it is that the price will break through it. Could we potentially therefore see a breakdown below the $55 level in the coming days, potentially as early as this week? That's the key risk facing crude oil, I think. If we do go below 55, then the next question is, can we hold below that level? And if we do, then who knows, 50 could be the next downside target, which is obviously $5 away from here. But if instead we get a brief breakdown and a quick reversal to post a hammer-like candle on the daily chart, for example, that would be a potential reversal signal. But we will address that if and when we see that. For the time being, the trend is clearly bearish, so we will concentrate on the downside rather than the upside as things stand. However, if we see price hold again around this area of support and push above the recent highs of around 58.50 and possibly even 60, I think that would be something positive insofar as the trend is concerned, in which case we could well see a continuation towards the 200-day moving average and higher prices. But as I said, we'll cross that bridge if and when we get there. For the time being, let's concentrate on the short-term levels mentioned earlier and see if oil prices can break below this area of support in the next couple of days. In the FX space, the pound is looking interesting. Well, not really against the US dollar because it's kind of stuck around the 135 level. But if you look at the pound crosses, for example, the euro pound is bouncing back ahead of the 200-day moving average. But more to the point, I want to concentrate on a particular pound cross, which is the pound against the Aussie dollar, which has been trending lower in recent days because of a recovery in the Australian dollar across the curve. And so the pound is one of those currencies which could weaken against the Australian dollar in the event that we see continued risk appetite. And given the fact that the RBA has basically dropped its dovish bias, while the Bank of England could potentially cut rates a couple of more times this year. So the rate differential certainly favors the Australian dollar as things stand. And for that reason, we've seen the pound against the Aussie come down in recent trade. Now, in recent days, we have seen a bit of consolidation ahead of a key level here, which is the psychologically important level of £2 per Aussie dollar. This level has been tested a few times in recent times, and today we tested it again, but we've bounced back from it. However, given the overall price structure in recent trade, the path of least resistance is clearly to the downside, and so I wouldn't be surprised if rates were to break below this area in the coming days. Key resistance is seen at around this level right here, which is 100 pips above the psychologically important level. This level was tested a few days ago, and we generally held on a closing basis until yesterday when we closed decisively below it. Today we've tested this level from underneath, and so far price is holding below it. So in all likelihood, it looks like a potential breakdown could be on the cards. So if the trend resumes lower, then we could well see a potentially large move, with the next potential support is not really obvious, but keep an eye on round handles like 199, 198, and so on. But I just want to highlight this key level of support, which is looking quite shaky at the time of recording, which could break in the next couple of days. For more trade ideas and analysis, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.